It seems like only yesterday we began October's trade. Now it's time to roll the calendar over to November. And what a time to do so with the Fed, RBA, and BOE slated to act. Not to mention the looming U.S. midterm elections. We are at a pivotal period in global finance. Simply put, the markets have a big week in store. Multiple central banking announcements, EU inflation metrics, and U.S. non-farm payrolls are the headliners. Believe it or not, that's not the tip of the iceberg. There's no shortage of high-impact economic events to kick off November. If you're going to prosper during the coming financial storm, organization and discipline will be your two keys to success. All right, enough hype. Let's dig into the nuts and bolts of the coming 5 days on the markets. Okay, everyone, let's dive into some of the technicals, the key markets, and the key events here for the coming 5 days. It's going to be a fantastic open to November. Let's get right to the charts and to the key news events. Okay, Monday, we're going to start off in the Eurozone. Eurozone CPI is due out to lead the week off. We're looking at the year-over-year number for October, supposed to fall from 9.9% to 9.6%. As we take a look at our monthly chart here for the Euro, remember, new month, new technicals. As we roll into November, we're going to have different anchor points and brand new support and resistance levels, really for the coming 4 weeks of trade ahead. For me right now, I take my monthly chart, nice resistance zone up there at 102.83. We didn't quite get that out of the euro this past month because why? We had compression right around that parity zone. So right now we're looking at CPI for Monday. We're potentially looking at this 102.83 coming into play by the end of the week, but that would be Monday's key market and our key market driver. Tuesday, we go right over to the RBA. What does that mean? RBA, Reserve Bank of Australia. We're going to have an interest rate, our first interest rate move of the week, first of three. The RBA is one of the world's doves. On the one end, you have New Zealand, it's very hawkish. On the other end, you have Bank of Japan, which is very dovish. Australia falls somewhere towards the lower quartile of the hawks. So what we're saying here is interest rates are due to go up for the RBA. We're looking just at a sort of a measly 25 basis point rate hike from 2.6 to 2.85%. This is more than likely going to drive some serious participation to the Australian dollar. So right here, we've got the Aussie dollar here. This is going to be our key market for Tuesday. As you can see, 38%, new month, new technicals, 38%, 65.38. We traded that level really fantastic. And we had a couple real great trades that came out of the Aussie last week. This week, I'm expecting a little bit more of the same. Tight doji month for October. November is more than likely to extend this range either to the downside or the upside. We're sort of in the midst of an intermediate term breakout, I would say, beneath that lower Bollinger Band. So we definitely have a bearish bias here towards the Aussie. We would absolutely love to sell a pullback. Perhaps the RBA getting involved will give us an opportunity to do just that. The US 100 is going to be our key market on Wednesday. Now, Wednesday is the headliner. It is the FOMC meeting, the Fed announcements, whatever you want to call it. The rates are supposed to go from 3.25% to 4%. A 75 basis point rate hike is what the derivatives traders, as of right now, are pricing in. About an 85% chance of that coming to pass. So right now, the markets feel very confident that we're going to see that 3/4 point rate bump from Jay Powell and the FOMC. Since the Jackson Hole Symposium, those have been the talking points. The bottom line is this: the Fed supposedly is committed to restoring long-term pricing stability. That means that rate hikes could extend well into 2023. We're going to find out Wednesday, 3/4 point rate hike. Literally all markets will go crazy. All markets will be affected. The one we're going to focus on here is the US 100. Here's my long-term range. Now, if you've watched one of my live streams, you know exactly this range. You probably know it by heart. 2020's panic COVID lows to those all-time highs last fall. What do you have? You have a heck of a range, a historic range for the NASDAQ, a historic range for the US 100 CFD. And right now, we are trading right in the center of that range. So this is a very, very pivotal period for the NASDAQ 100. We're between that 50% retracement of that 2020 to 2022 range and the 62% retracement of that same range. So top side, we are in a ranging market, a compressed market, a consolidating market. Top side resistance is at 11.7. Bottom side, 62% is right down there at 10.5. Would love to buy 10.5. Would love to sell 11.7, as we have really for a majority of the past 4 months. So fantastic stuff here. Definitely a lot of technicals in play there for your Wednesday session. Fed Day. It's Fed Day. Be sure to tune in for us for our FOMC live coverage. Okay, Thursday, there's no rest for the wicked. About 24 hours, not even 24 hours later, the Bank of England brings us our last central banking activity of the week. Bank of England meeting. We're due to raise rates. Hawkish is the theme this week. We're supposed to raise rates 75 basis points from 2.25% to 3%. The UK sort of bringing up, I would say a little bit middle right. If I was going to say from all the way to hawkish, New Zealand's your global hawk, all the way to your dove, your global dove is Bank of Japan. I would say that the BOE is probably somewhere right around where the United States is, sort of middle of the road. Not quite as hawkish as Canada, but not quite as dovish as the EU. That's where we're at. The BOE is supposed to raise interest rates. That's going to bring a lot of participation to the pound. The market that we're going to be focusing on for the Thursday session is the Euro Great Britain pound. Right now, we could see really a bearish close to October, November. Do we see a retracement or do we see an extension of this sentiment? You can see over the long term, it's been sort of a more active market lately, but typically that Euro Great Britain pound is sort of a compressed market, a real tight market. Right now, we're trading at a monthly indecisive area, really a non-committal point. I'm looking at 78% of the most recent 2-month range, and that right there is going to be about 85.42. So somewhere around 85.50, we could see potential support, and we'll break down these levels as they come to pass in the market. But we have a lot of long-term anchor points that are likely to come to pass, at least get challenged in the coming 5 days on the market. And the last market we're going to talk about here is gold, and that's for Friday's session. Gold, we've got NFP live. Be sure to join us in the trading room for live coverage of that. Really, NFP, US NFP affects all markets, everything from your forex pairs, your US dollars, to your commodities and your shares. So in any case, what is NFP? It's your US labor market. It's one of the biggest employment metrics in the world, if not the biggest. What do we expect? Well, here we go. I mean, it's supposed to fall. US NFP is supposed to fall by 63,000 jobs, coming in at 200,000, falling from 263,000. The unemployment rate is to rise to 3.6% from 3.5%. This is a major market moving event. Why? Because number one, it's NFP. That's just like normal. We know it's coming every month. But number two, you have the U.S. elections the coming Tuesday. The following Tuesday, within just a few days after this NFP, there's going to be a lot of folks going to the ballot box. And a negative number here, a positive number here, really can roil markets. And the idea being that election uncertainty may or may not be escalated from this NFP number. So we've got the Fed acting, we've got NFP, really a lot of pressure on the financial markets in general. As I'm looking at Friday's key market, which is gold, I'm looking at definitely October's really a double bottom, a September-October double bottom, and it's right down there, right around that 16-14 level. I have long-term support down there at 1585. If we do break through that double bottom, I think we get an opportunity to test that 1585 level, and we'll bring those setups as they come to pass in the trading room. Just remember, typically decent action on Fridays with gold. A lot of folks like to get long gold, take that safe haven into the weekend just in case something unforeseen happens over the weekend. So there's our look at the 5 days on the markets. I think that between the Euro, the Aussie, the US 100, the Euro Great Britain pound, and gold, you have a decent little cross-section of markets there to trade. But remember, join us in the trading room. We'll cover all these things live as they happen. While the Fed, BOE, RBA, and NFP are this week's prominent events, they aren't the only market drivers on our calendar. Australian retail sales, the UK manufacturing PMI, and the US ISM non-manufacturing PMI can also drive participation in the marketplace. In addition, OPEC is scheduled to meet, and labor metrics from New Zealand, Germany, and Canada are all scheduled for release. Don't blink. Multiple high-impact economic events are scheduled for each and every day this trading week. The coming 5 days are going to be extremely active in the trading room. Remember, victory loves preparation. You can make sure that yours is up to par by checking in with the ForexSignals trading room each and every day. Until then, buckle up and get ready. We'll see you on our next live stream.